Good morning. Good morning. Today is Wednesday, April 1st, April Fool's Day. And glad to be done with March, everybody. Nice to finish on a positive note there. Nice to see the markets really have that big push to the upside, but I don't think that we're out of the woodworks just yet, but a good positive sign. Hopefully we can end on a positive note. Everybody note that we are not open to trade on Friday. So tomorrow is the last trading day. So note that for all your options traders for your expiration dates. So that there is no Friday expiration date. It will be tomorrow. So I think there is going to be two consecutive expiration days. So you're going to have a expiration date for today and for tomorrow, 2 days in a row. So for your equity. So getting right into it right now. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and go down into the description area and join our Discord channel for live updates, for trading updates, and different contests that we're going to start to have coming soon. So also note, if you have not already, go to our website at QOLTrading.com and sign up, be a subscriber to the website so you can get our weekly newsletter that we started putting out on Sundays. We've put out 2 editions so far, so we will be putting out those editions every Sunday, pretty much recapping the week and what to expect for the market ahead. Anyways, that's it for the announcements. Let's get into our data that we have for today. Core retail sales up a little bit. Non-farm unemployment is up as well. Probably not going to be positive on the marketplace. Retail sales up a little bit as well. I would not be surprised if we get a pullback from yesterday's rally that we had. Let's see. We are still, without even looking at things, I know we're still below these moving averages. So, but we'll get into that in a minute. And today, 9 o'clock, ISM manufacturing, and that will be it for today. I'm not sure what this is, Ward's total vehicle sales, but and then you have crude oil inventories. And then tonight, President Trump addresses the Iran potential pullout. So that'll be done there, and that'll be good. So we can get done with all that and then get on with our lives, hopefully. So let's start with the VIX. VIX below the 20-day moving average, which is great. So hopefully we can, we filled this gap up that we had yesterday. Market likes to, come back and fill these gap up and gap down. So we do have a little tiny gap down from this morning. So I wouldn't be surprised if we come back up here, fill that little gap, maybe even pop through it and get up to the 20 and maybe pop on down. But it's good that the VIX is starting to de-escalate now, which is great. Will be fantastic if we can drop below this 50-day moving average down to 2173. I would say that once it's official that we pull out of Iran, we will be pulling back down below the 50 and then start working our way down to the 100, which is at 1932, and then down to the 200, which is at $18. So that would be great there. Let's take a look and see what's going on with the oil market. I think it's dropping below 100 right now. So you have Brent crude. It's still above $100 a gallon. So, but it's creeping, stair-stepping lower, which is positive, and it's all about the announcement that potentially the Iran war will end in the weeks to come. Let's take a look at crude. Crude is below $100 a barrel, which is great. I'd like to see us below this 20-day moving average at $92.60 a gallon, or a barrel rather. So that would be good to pop below that, and then maybe head down to this $87.42 a barrel. That would be good to start stabilizing a little bit. I don't think we're going to get down anytime soon down to that 76.80, but that wouldn't be bad if we did. But I think it'll take a little while to get back down there. So let's get over to the ES. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. ES, so we're approaching some headwinds up top here. We have an open point of control at 663. 66.53.55. Above that is sitting the 20 and the 200-day moving average at 66.74.72. They're both right on top of each other. So if you can plow through that and hold above that, I like that. And then you can start moving towards these other levels that we have up here. 6704.14, which is an old all-time high back before we plowed through that and made the all-time highs at 7,000. So your first line of resistance is going to be up here at 6653.55, which is a point of control level that we have open from last week. Downside, if we get pullback, probably your first pullback level is going to be the close from yesterday, sitting at 65, 66, 78. If you lose that, I like a pullback level, a 65.23 level, which is August of last year's high. You know, you like to break and retest, right? You break the high, you come back down here, retest, look for market price action, and then you take it higher there, right? So I like that for the levels on the ES for today. Let's get over to the SPY. The SPY is going to be pretty similar as far as the ES is concerned. So we've got these, we're sitting right here below this 20, the 200-day, 661.77. I wouldn't mind, you know, you're probably going to get some headwinds if you pop directly up there. I would not mind a pullback down to this 644.72, which is March 20th low. Below that, 643.33 would be another level here. And then you have this pre-market low from last Monday if you did lose those levels. However, I do like this level holding right now, which is August, monthly high from August of last year at 649.48. So I like that level to hold. If you hold that level, then you can push into this 20 and 200-day moving average, 661.77. If you get above that, you push to that 666.78. Above that, I like to push into that December monthly low at 671.20 before you would get some resistance up there at that level. Let's get over into the NASDAQ. We'll plow into the NASDAQ. Again, new to the channel, subscribe to the channel, hit that thumbs up button, like this video. NASDAQ getting some pullback a little bit right now based on these numbers that are coming out. I would not mind a little pullback based off of what happened yesterday. You do like when the markets do rally, you'd rather see stair stepping. You don't want to see straight up moves, right? Straight up moves get retraced immediately, right? You want to see something stair stepping, something like this. This is a nice, even though this is after hours, this is what you want to see during hours, right? You want to see stair stepping, right? You don't want to see a big violent move one way or the other, right? Because then it's just going to get retraced and it's going to speed in the manner it went up is the manner it's going to go down. And the manner it's going down is the manner it's going to go up, right? Although we all know that things go down a lot quicker than they go up. So I like this level that it's trying to hold here. You want to see this 24,084.44 cents hold. It's a point of control that was open from Thursday of last week. I can show it to you. This level right here, we came and we filled it this morning. So right now you want to pop above it. Hopefully we hold that level. If we hold that level, I like us pushing into that 24,306.25 level, which is a high from August 13th of last year. Above that, you have the 20-day moving average at 24,410.15. And then above that, you have the 200 sitting at 24,576.89. If you lose that level, I don't mind a pullback. If you get a pullback down to this 23,505, above that, probably, I mean, the 23,616.25 is probably your first pullback, but I think even a better, nice, stronger pullback would be that 23,505. If you did get that, it would pretty much signify giving back most of that move yesterday. But, you know, maybe the first level would be good, would be that pre-market low from Monday of last week, 23,768.27 for a good low. But if you lose that, I think you're going to quickly get back this big move from yesterday, right? So got to watch that and pay attention to the news. The news is dictating the moves on the markets these days, right? Always told you got to, when the market was selling off like that, keep some kind of a long position because any kind of news that comes out is going to spike the market. The same thing right now. So now you have the news that spiked the market yesterday for the war is going to end. Well, if there's a missile that gets launched, if there's a tanker that goes down in the Strait of Hormuz, then this can get wiped away in a second too, right? So right now, everybody's not trusting the media. They're not trusting that our administration is talking to the correct leaders of the regime. So they want to have faith in that. And the only thing that is going to give us faith is time. Time and less missiles being fired and more tankers being able to cross the Strait of Hormuz. So Looking at things right now, same thing. If we can get above this 584.63, I think we have a clear shot into this monthly low from October of last year, sitting at 530.36. Above that, you have the 20-day moving average at 591.95. And then above that, you have a monthly low and the 200-day moving average sitting at 594.41. Downside today, not sure what this wiki candle is. We've been seeing a lot of these wiki candles in pre-market on the Qs. The close from yesterday, 577.17. If you did come down there, that would be a good line, a good level for support. Maybe take a long there, see what kind of market, see what kind of price action it shows you there. If you lose that level, I like that 574.63, which is July. Excuse me, which is July of 2025's high. And then below that, you have that pre-market low from last Monday, March 23rd at 573.25. If you lose that, this becomes that speed zone again that I talk about all the time. You come down here and it's 588.05, which is not a bad level to take a long as well. This point of control, 563.55, was filled, but we're going to leave that level. I like the way the market was responding there, so I'm going to change that to open, and then all I do is just come over here and I just write filled. I leave it on the charts because I use that as now a support level if the market pulls back to that level. So that's it for the broader markets and the Qs and the SPY. Let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel, like this video, and go down in the description and join our Discord community. Tesla, nice little pop on Tesla yesterday. Same thing on Tesla, though. You know, these big spike ups are no good. We like to see stair stepping. I don't think that we're clearly out of the woods yet, but, you know, good levels that we're holding right now. This level right here, this is a midline regressional trend line I have from June of 2019. So big level right here. You want to hold that. If you lose that level, I think you come back down here and you're going to retest this midline regressional trend line that I have from December, from the all-time highs of last year. Hopefully you hold that. Seems like we held it in pre-market right here. So this will be a pretty decent level. Pull back 374.87. Ideal pullback in all reality here is this level here, this 367.71. If the market fails today and we continue to lose these levels, this is really the level that would be a good pullback long for Tesla at 367. Between 367.71 and 368.33. It's a break in structure. I had this on the charts here that if we broke that structure there, which we did yesterday, that we were, and I had it down here. It was also a September monthly high and we broke it. We came back down here. We supported it here. That was going to be your line in the sand to go higher there. So I do like this level of support if we do continue, if we do sell off today. On the upside, though, if we do continue to push higher, we're probably going to get some resistance up here at this 20-day moving average at 384.35, exponential moving average rather. And then you have a low from March 2nd of this year. It's a weekly low at 385.38. And above that, you have the 20-day moving average, also sitting above February's monthly low at 387.53. There's point of controls that are open at 388.90. If it does get through there, I would expect to get some little headwind and resistance there at those levels as well. The only point of control we still have open down below us is 333.78. Kind of a little bit of a looking over my shoulder a little bit, understanding that I wish that we would have gotten that filled as we were heading higher right now. So I'm still looking over my shoulder about this 333.78 level, right? So I would be careful on these little pops right now. If we do get a pop, I would think, but my thesis going into today, if we get a little pop in the morning here, to be careful at this level here, this exponential moving average, 20-day moving average at 384.35. Downside levels, first one is 371.87 for a potential long. Actually lines up with this point of control that was from yesterday at 372.28. This is not an open point of control. However, it is a point of control. There's a difference, okay? And then if we lose that level, I think we come back down here to these levels that I spoke about just a minute ago at these 367.71 to 368.33. If you lose that level, I had this 366.10 level. I just kind of plotted this morning. I'm going to see how that level holds up, and I may we'll see if it holds up. If the market does pull back to that level, I'll probably give it more analysis. But the way I was looking at it right now, I actually like the way this level looks right here. You know, you have some highs that responded here, highs that responded here, and then we plowed through that level here. So that would be a nice little break and retest level there that I have there. So just watch your market, your price action right today. So anything can happen. Watch your news as well. That's the key factor as well. So as far as what we're going to do today, so like I was saying earlier, there is no trading. The markets are closed on Friday, so there is going to be 2 consecutive days in a row of the days till expiration. So you're going to have an expiration date today and tomorrow. I am going to start out with tomorrow's expiration date. No reason that I need to trade today's expiration date and have my premium prices be all volatile. So I'm going to have tomorrow's expiration date. I'm going to have the 385 calls up there for tomorrow. They closed at $1.12. However, the market closed at 372. We're going to open up, if we open up right now, about $6 to $7 higher right now. This will open up probably close to $3 premium. That's my sweet spot. And then I'm going to have the 377.5 puts. And these are all expiring tomorrow. So these closed yesterday at $8.70. Because we are now opening up about $6 to $7 higher, I anticipate these probably to open up. These are probably going to open up 377. They're probably right in the money here. Probably open up $4, maybe $5 in premium here. That's what I'm going to start with today. As far as yesterday on your 5-minute opening range, beautiful day yesterday on the 5-minute opening range. Once you got that move, we've been talking about this in the trading room, that the moves, they're not happening so much in the morning anymore. You really have to stick around till later on in the afternoon till you really get these moves. So you could see if you stuck around and you trade, you did get your breaks, but they were not really big breaks until the afternoon. You got your break at 11:35, and then you were able to get your move. Your range yesterday was 361 to 364.66. So you had about a little over a $3 range. So once you broke that once you broke that range up there, you had you could have gotten about $7, probably $7 when you initially broke at 11:30. Would have gotten a real sweet move right on the initial break here. So there was news that came out about a potential war ending at about 11:35 yesterday. I was not by my computer at 11:35, so I was not here for this move. But as you can see, this is what we typically go over in the trading room, the 5-minute opening range. You could see yesterday it did not break the low, so it was only breaking the high yesterday. So you were only thinking long yesterday. And how do you monetize that? So the way I monetize it is I have my calls up top here. If I think the market's going up and I see that we're breaking up, my thesis is you break the 5-minute opening range, you're looking for areas to take your long. And the way I take a long is I buy a call. If I bought a 1 lot here and the market went up, you figure about a 50% ratio on for every dollar the equity moves up. So if Tesla moved up $7 yesterday, you figure you could have gotten about $3.50 on your premium. So if you bought a 1 lot, no matter where the premium was, you would have made $350 on just that 1 lot. So that's pretty much the basic gist of it. But if you come in the trade room, we go over it into more detail. So again, if you are new to the channel, subscribe to the channel, hit that thumbs up button and like this video, and go down in the description area and join our Discord community. That's going to be it for today. If I don't see you in the trading room, I will see everybody tomorrow morning. Have a great trading day and talk to you soon.